Welcome out to the Trade Justice Podcast. Today, we're going to be talking about markets and missiles as we had some shocking footage of Israel launching strikes against Iran's nuclear facilities yesterday in an obvious escalation. We want to talk about that from a market perspective. Going to look at a couple case studies historically to talk about how war, missiles, however you want to categorize it, how it does impact the market. Then we're going to get into inflation. We're going to talk about the PPI report, the CPI report here today. Then we're going to get into Coach's Corner as well as Stock It or Drop It. Going to have a fun pod. But before we do any of that, we got a webinar coming up on Monday, June 16th, 7 p.m. Eastern Standard Time, as we continue the virtual conference throughout the tackle trading holiday season. And this time we're talking covered calls, right? Those covered calls bring in that cash flow compound for a legacy. Going to teach you all about it on Monday. So come check it out. You can register in the link in the description below. It's 100% free, and you're not going to get a better education, in my estimation, out there in the entire market than what we do at Tackle Trading as the #1 trust pilot rated education platform in America today. With that said, Mark, how you doing today, my friend?
I'm doing good. Listen, I was prepared for another podcast that we were going to have today. We'll hold that. In fact, we had a couple.
I was as well.
Up. We had a couple of good ideas, and we're like, we need to talk about, why, traders are bulls from a behavioralism standpoint. And we were going to talk about, this deep dive into another macro subject. And then, last night happened, right? And from a market perspective, that became the relevant, discussion in the market. And here we are, right? I don't think anyone enjoys discussing war, right? But from a market perspective, understanding war and price action, very relevant to today's topic. So Matt, let's get into it. Matt, give us a brief update, because you are my brother. You're also the person I call first when something happens in the world. When something happens in the world, one, because I enjoy talking to you, but two, I enjoy your take on it because you see things from a different perspective. And the question I asked you last night, almost immediately, well, the first question was, all right, what do you know that I don't from the headlines? And the second question was, will you compare this to Russia, Ukraine? We'll get into that in a second and look at the price action from Russia or Ukraine. But Matt, what do we know from what has happened? Where are we at? From the first strike of Israel on Iran to when we're recording this right now.
Well, to understand last night, I think you got to go back to last year a little bit to understand the kind of the April situation when Israel, launched those airstrikes against Iran in April of 24, a little bit of a preemptive strike on Iran to hit certain military targets and whatnot, take out certain, in a response to obviously some escalation out of Iran's proxies. And they were getting really, really sick and tired of getting, hit by Hezbollah from the north, Hamas from the south, the Houthis from Yemen. And so they launched those preemptive strikes on Iran to kind of, wake them up a little bit to what's going on to a certain extent. Iran came back with, 100 ballistic missiles, 200 drones. The U.S. and Israel, as well as other, allied partners in the region, was very, very successful in shooting a lot of that down. So you got to go back to that to kind of understand yet last night, because there was a big debate in that moment in time.
And this happened in April of last year, right?
Yeah, what should Israel do? Should Israel strike the military targets? Should they strike the nuclear facilities? The one thing I think we all can understand and agree in the West is Iran cannot have a nuclear weapon. And there were reports coming out over the last couple of days specifically that Iran was days, if not weeks, away from not only having a nuclear weapon, but having the ability to produce up to 15 warheads. Now, obviously, it takes a little bit more time to get the ability to distribute that, but that's a very shocking and very scary headline, quite frankly. And Israel, over the last couple of weeks, has obviously been preparing for this attack. And as the nuclear conversations between Trump and the administration in Iran, who are negotiating a second addition to the nuclear arms treaty that President Obama signed in 2015, that President Trump got rid of in his first edition, there were ongoing negotiations on that. I think they were scheduled to do more talks on Friday of this week. Obviously, that's going to kind of go into the back burner a little bit. But that was where the debate was centered a year ago, and today there was no debate. We all kind of saw with our eyes what happened last night. Israel strategically took out a tremendous amount of the nuclear ability out of Iran yesterday, and Israel basically stated that this is not a one-day situation like that strike in April of last year was. This is a special operation that is going to be ongoing. And they are committed to taking out the nuclear ability of, or wherever Iran is at on that nuclear capability. And so it was shocking to see that kind of hit last night, but there was chatter in front of that there was escalation happening. Now, the ultimate question is, where does escalation occur here? Because if it was just that, if that's all it is, you're kind of seeing the market response here today.
Yeah, because, and I think it's important, and we'll look at in a few minutes the price action back in April of 2024. But in 2024, Matt, it was really the one hit, next hit, and some people even cynically refer to it as performative theater, right? Because it felt like a lot of flash.
Are you talking Iran's response?
Yes. And then Israel's very calculated, because when Israel hit back, they hit a couple facilities and both sides said, all right, it's over, right? Mm-hmm. It's over. And so it was limited. It occurred over a few day period. And then we knew the conclusion. And then it didn't become a market story anymore, really, until recently. And a couple of weeks ago, Matt, CNN reported that Israel was planning on doing exactly what they did last night. And over the last couple of weeks, we've seen a couple of responses. You asked me an interesting question while we were discussing this last night. And you're like, listen, Mark, the markets had a lot of good news this week on CPI data, on PPI data, on
trade war alleviation,
trade war, China and the U.S., whatever may happen.
You might not love the parameters of the China-U.S. deal, but at least they're not yelling at each other. That's alleviation.
Yeah, and here we are. And this is how you phrase the question to me. Here we are, and we were having things in a technical situation where you've had catalyst, and we're not seeing any liftoff. Was the market sniffing this out? Right. And, was oil sniffing this out? Right.
Oil was sniffing something out. There's no doubt about that. We've been talking about oil for a little bit of time now at Tackle ever since we broke that 64. Well, even before we broke that 64 level. But yeah, I do think there was a little bit of sniffing it out by the market.
Because this is the thing all week long. I talked to my brother multiple times all day. And
I've said this 3 or 4 times to Mark this week on Tuesday, on Wednesday, on Thursday.
Why is the market not lifting off?
Why? Because, okay, let me backtrack a little bit.
Okay.
The reason I asked that question to you 3 different times this week, what is your what is your rationale? What is your logic? Why do you believe the market's not lifting off here? The reason I asked that is because last week, Mark, we technically broke 6K in the ES. We closed above that 6K level in the ES. That's an open air level between 6K and 6,200, talked about it in the newsletter last week. And so once you got above that 6K level and you get into a little bit of open air, nothing really should stop the market unless negative data comes into the market to achieve its technical resistance target of 6,200. We haven't seen that this week, though. We've seen the market play defense on top of the breakout channel, and I think you could even say that today. We're seeing the market play defense on top of the breakout channel above 6K. You're at 60.25 right now, for goodness sake. And so the market played defense all week, which means it was hesitating. There was something holding it back. And initially, Mark, I kind of felt like that was the interpretation of the U.S. trade deal that was negotiated in Geneva between Treasury Secretary Bessent, the trade team out of the U.S. with China. They reiterated the deal parameters from the Geneva deal from a few weeks ago. There was nothing really new to it outside of adding a little bit of bite to, China enforcing on certain parameters, the U.S. enforcing on certain parameters. They reiterated certain tariffs. Tariffs went from 35 to 55, 20% tariffs on fentanyl, 10% general tariffs, 35% on top of that. So you look at the deal parameters and I'm like, that's not exactly a great deal in my estimation versus where we were 3 weeks ago talking with Geneva, right? And so you go from 35% tariff up to 55 incomplete, and you're like, okay, where's the growth going to come out of that one? And so that's what I initially felt was kind of hesitating the market a little bit. Not a bearish argument. That's not a bearish argument.
No, it's not a bearish argument. It's
that's
just
a hesitation argument, right? Trying to understand causation for hesitation. But now after looking at it and kind of seeing what happened last night, and by the way, Israel was lights out, like proven yet again, the number one strategic tactical military force in the world. Yeah, if you want to go out there and have some shock and awe, you bring the United States military. We'll show you why Palantir has a 300 forward PE ratio. But in terms of Israel, you go from what they did a year ago with the pagers to what the strategic execution of what they did last night. Mark, there was a lot of thought and a lot of writing and a lot of debate and a lot of discussion on whether or not you could successfully take out Iranian's nuclear capability. And yet Israel in one day kind of showed that they have control of that. They have control of the skies. They have control of the land. And so it's going to be interesting to see kind of where this goes from here. But I do think you got to be at least slightly impressed with the ability for Israel to execute this from a tactical perspective. My goodness, their intelligence is the best in the world.
Yeah, no, and one of the market questions, and agree at 100%, it's insanely impressive. The tactical, question from a market perspective becomes one of escalation, Matt.
Yeah.
And I don't want to look at the chart.
Would you agree that if it is just what we have seen so far, we've seen the market respond?
This is not a market story. If there is not there's two ways it is a market story, in my opinion. The first way is if it broadens out, involves the United States or a Russia or another actor, where it becomes something primal, right? Where it invokes primal fears of worst case scenarios and horrible things, right? Mm-hmm. Trump has said multiple times, even today, that United States is not getting involved, right? And so, but how other actors, but that's one way. Probably, I asked ChatGPT actually last night, it's like, what's your scenarios? They put that as a very low probability given all of the parameters put in. The second way, and this is, the higher likelihood if it were to occur, is if it impacts the price of oil, mm-hmm. right? If for some reason this escalates into a, Houthis, Hezbollah get involved, target specific, shipping, if there's something that happens in a broadening scenario, JP Morgan had a note out this week actually discussing, and this actually gives a little credence to maybe the market was sniffing this out. They actually put out a note this week that if, worst case scenario, if this broadens out to multiple actors between Israel and Iran, they could see 120 on the price of oil. Obviously, mm-hmm. if oil,
by the way, before you move on, they say that every single time that Iran and Israel ever have any escalation, they basically copy and paste what they said from last April.
And so
their analysis is so boring and old and oh my goodness, don't get me started on it. They said the exact same thing last year. Do they not put any thought into the current geopolitical situation in comparison to last year's geopolitical situation, or do we just constantly copy paste everything?
People have deadlines, bro. They got to get that note out.
All right. They got the note out.
But that is how it becomes a market story, right? And we're going to talk about oil and inflation here in a few minutes. But getting to it, if this is all what
Goldman Sachs talking about crude oil at $120 when it's currently $70.
It was JP Morgan
or JP Morgan.
Don't worry, Goldman Sachs will have their note.
They'll be right behind them.
Afternoon. right? But that's how it becomes a market story,
Yeah.
right? Like it's like India and Pakistan, right? I mean, they literally, there was, a few weeks ago, a real chance of escalation there, right? But it really wasn't a market story, right? Nor would
No, we
this
didn't
be
podcast on it.
you know, nor would this be a market story unless oil is involved, right? And then if oil is involved, well, it brings in Fed policy, it brings
Oil
in
or the United
inflation,
States
it
military,
brings
like
in
that's a market story.
slowing growth, right? Like, it brings in all of the macro big, topics. And we'll
Mm-hmm.
talk about that inflation and Fed in a few minutes. So to answer your question directly, no. If this is all it is, this isn't a market story. Market will move on. But my question to you, and it was a question I had for you last night, right? Escalation is always a worry in these situations from a cold-hearted market perspective.
Yeah.
And I asked you, like, what are the scenarios? How do you see this playing out? And I know that is a very tough question, right? Because you're dealing with a lots of moving parts, right? You have nations trying to
nations
reach
at
out.
war. It doesn't get
Nations
bigger
at
than
war,
that.
and you have other nations trying to get involved to broker peace, to cool things off, right? Lots of moving parts. What are some of the different scenarios that can play out, best worst case there?
Well, best case, peace handles, and we get a negotiated deal with President Trump and Iran, and they sign a similar agreement to stop the development program of nuclear, and allows Iran to have nuclear energy in their country with basically oversight. That's best case scenario here, I would say. To get to best case scenario, I think you're going to have to see a little pain. Like there's history here, there's emotion here, there's centuries of discussion to have here. But what's the specific question? I guess like different scenarios. I don't know where you want me to go with different scenarios. There's a lot of different scenarios.
Okay, let me be very precise from a market perspective. Where do we know it's a market story at that point? Is it just the price of
It's
oil?
a market story today. I don't understand the conversation. We're having a conversation about the market because it's a market story today. It's not like get off this JP Morgan 120 oil. Like this, it's by the time oil's at 120, the market's been destroyed. Of course it's a market story. So JP Morgan, like it's a market story today, right this very second, today. If Iran escalates and Israel comes back, that's going to continue to be a market story. And so it's a market story today. To answer the question specifically, I don't know what JP Morgan's talking about, and I don't think you should be reading them any longer.
Well, I always read the big banks. It is, if nothing else, you got to know what they're saying, right?
Well, when oil gets to 120, we'll say it's officially a market story based on JP Morgan's analysis then.
Okay, but is there is this enough of a weight? Let me rephrase the question from a different angle. Is this enough of a weight to you that as long as there is basically hanging over the market, they're at conflict, that it will, hover over the market until there is resolution of some level? Is this going to be with
I think this situation can cap out market performance until there is an alleviation or a resolution. Yes. Do I think that we're going to have to repeat the downward pressure and price of the Ukrainian Russia saga initially, or the initial Iranian Israeli situation from April last year? I'm not sure. But I certainly do think as long as this cloud hovers the market, there's going to be concern. There's going to be concern because of oil. There's going to be concern of oil's impact on inflation. We just got through two reports, CPI and PPI report, that were very good reports, quite frankly. Both of them came in at 0.1 against expectations. Year over year numbers were both good on both the PPI and the CPI report. And yeah, you could sit there and geek out on the hypothetical debate on what could impact inflation in the future, and we'll certainly talk about that a little bit. But at the end of the day, the reports here today were extremely good, or not today, but this week were extremely good. So oil going up, and as long as we see this expand from a conflict perspective, oil is going to continue to go up in that scenario, and that's going to put a lot of pressure on the PPI report specifically. That's going to put a lot of pressure, because one of the benefits, or one of the positive things about the PPI report this week and the CPI report, was energy price. Energy was one of the reasons we got pretty decent numbers coming out of those inflationary reports. So obviously this is going to have an impact on the macro situation when you're talking about inflation, and the longer it goes, the more impact it's going to have. That to me is, you keep saying, is this a market story? It's a market story. We're talking about it in the podcast. We led with this conversation in the podcast. It should be assumed it's a market story. Where does it escalate, and how does that impact the market, I think is very important here. You look at the market response here today, and you got to appreciate the bulls coming back in a little bit and trying to play a little bit of defense. I mean, we got a nice little hammer candle so far today on the SPY. It really hasn't shown that much volatility. And so where this could impact the market more in terms of the downside pressure, because I certainly believe it caps out performance on the top side without alleviation. Like, we're not creating momentum here. Right? We're not creating momentum here with the backdrop of a potential conflict in the Middle East that could expand either. And Mark, best intentions aside, it's not a major situation that usually impacts escalation. It's a missile that hits and accidentally kills the wrong person, quite frankly.
And yes, and this is what I want from you.
That's where the concern is right now. The assessment is Israel is still ongoing. The attack, the initial bombing of the nuclear sites is still ongoing, and there's going to be multiple phases in that. We saw the initial retaliation of Iran launching 100 drone strikes last night, and honestly, I was like, really? That ain't going to get the job done. And so the ultimate question is, what can Iran do here? Like, I'm hearing everybody else out there say, Iran's going to hit back hard. Iran's going to hit back hard. Iran's going to hit back hard. And from a strategic, tactical type perspective, I would agree with that. Iran has to hit back hard. They have to. Israel controls this conversation. They control the skies. My question to you, my friend, is how? Israel took out their top military generals yesterday. Israel has control of the skies. Jordan is not allowing you to get into their airspace. And so what's Iran's choices here is going to be interesting to see how that plays out. Do I think Iran goes big? I do. I do. But I'm not sure they can do much more than what they did last April. Maybe just on a little bit bigger level. Instead of 95 ballistic missiles, it's 120. Instead of I just don't see what else they can do outside of that.
Give me April of 2024. Let us look at the last time, because there's something you just said there that is a parallel, right? Expect Iran to hit, but if their reaction, if their ability to hit Israel is limited in reality, then I think, a lot of fears, a lot of things will be alleviated. And that's kind of how we saw April play out last year. If you'd hone in on April, I'm going to give you a couple dates. First of all, on April 1st, 2024, Israel had an airstrike on the consulate in Damascus, right? This made news, came out of nowhere.
Well, before that, what was the trend before that? Consistent bullish.
Consistent
bullish. Capped out performance in the short term. That's kind of where I'm at right now.
Yeah.
Go ahead.
And so April 1st, they hit the consulate in Damascus. Immediately, I remember seeing that. In fact, I called you up and complained. I'm like, how on CNN is this story down at the bottom of the page? This is a massive story because it could lead to escalation. Well, it would a few days later, as fears mounted, right, that, Iran would do something in response. And so there became this fear buildup, right? There became this fear buildup. And on April 13th and 14th, as the fear was kind of building, Iran launched their what they called Operation True Promise, right? And this is, I'm sure a lot of you have seen, this is where the missiles were in the sky, the Iron Dome held tough, right? A few of the missiles struck, but it had very limited impact. Now, this caused a short-term downtrend in the market because the world did not know Israel's response. They didn't know what Israel's response would be. They didn't know how big it would be. After all, they just had something like 500, 1,000 missiles fired at them. And during the week, and so before you had the 13th, 14th missile attack, you had hesitation in the market, wanting to know what the next wave was. Well, then on April 19th, we got Israel's response. It was a very limited retaliatory strike on Iran. They targeted an air defense radar facility.
It was the most obvious attempt to say we're done ever out of the Israeli-Iranian conflict. It was obvious in the moment that they were basically saying, we're done. And Iran was not going to hit back. That was, yes, I agree with that.
It was. I remember talking about it at the time. I was like, this was very limited. The market picked up what was very limited. And that's when it stopped becoming a market story. Right. Mm-hmm. When the world sensed whatever this is down the road, it's done right now. Right. It's done right now. You saw the consolidation bottom pattern before you saw the next leg.
Yeah, honestly, it was a good King's bed pattern.
It was a really very nice reversal pattern, actually. And so you saw this play out into Israel where, right, you had, escalation, worries. You had, a strike. What would the response? But then once the market got a sense that this was no longer a thing, right? Bottom was in. The bottom was in. I want to go to February of 2022 now. And I remember when I called you up last night, I was like, do we cover the Gulf War in analyzing this? And you laughed at me and you're like, listen, Grandpa, listen, like in 1990s, algos, like might as well talk about the Civil War and how it impacted markets, right? It's just an entirely different world.
Just a different world.
Now, we were at a much different point in the chart on this. You had the Fed, pivoting or, actually, admitting that maybe inflation isn't transitory, right? And so you had a lot of volatility heading into
you also had tanks on the border of Ukraine for weeks too. So there was that.
So it was a different situation because one, you had additional macro pressures. Two, you kind of saw it coming, right? There were reports out for weeks that Russia was going to invade Ukraine. Russia was going to invade Ukraine, right? Like citing like, hey, U.S. intelligence is telling us multiple news sources, right? And
for weeks, yeah.
So a different situation in the sense that the actual act, and you actually did see this in the Gulf War as well, where the actual invasion itself, that power green candle you saw, that you see that big green, the one to your right, the big gap down, right there, right? This occurred on February, let me get my date right, 24th of February, marked the actual full-scale invasion of Ukraine. You gapped down, right? Had like a little counter rally, but you didn't have liftoff, right? You fought through those headlines for a good 2.5 weeks before you found a bottom and then had a little squeeze, and then you'd have the bear market in 2022. That was, primarily inflation. And so when you look back at the last couple episodes, Matt, I mean, it's always apples to oranges on some levels. What are some of the similarities and what are some of the differences you see between this current one and the two previous ones we've discussed?
I don't see a lot of commonality between Ukraine and Russia versus what we're dealing with Iran and Israel here today. Those tanks were on that border for a long time, and there was a lot of discussion, anticipation. The market had plenty of time to price it in, and you actually saw most of the early downward movement in price in the market was in that point in time when people were having that conversation with the tanks on the border and not actually coming into Ukraine. When you actually saw the real situation play out, the market actually bottomed out right then. Market found a pretty good bottom very quickly, quite frankly. And so I think that one's a little bit different because there was a lot of anticipation on that one. And obviously, I think the market was having a lot of different conversations as well that moment. We were dealing with inflation. We were dealing with the central bank at that moment. We were going through an increasing of interest rate policy with inflation starting to get very, very nerve-wracking. And so the market moved on from that story because it was going to be an ongoing storyline, quite frankly. And everybody knew that very quickly. There was not really a debate on whether or not this was going to be a retaliatory strike and then whether it's just going to get done or whatever the case might be. With Israel and Iran last year, it was really a matter of, the retaliation and how far that retaliation was going to go. There's a little bit of difference. So I don't find there to be a lot of commonality between Ukraine and Russia. I do find there to be obvious commonality between Israel in 24 and today. I would just say this, though. In 24, a year ago, Iran had a heck of a lot more military capability than they have today. And that's the one open question I have in all of this saga is does Iran even have the capability to execute anything from a prolonged situation? Or do they just have the ability to launch, airstrikes, drones, missiles, ballistic, so on and so forth? And so Israel controls a lot of this conversation right now. They control the skies. I don't know how and by the way, Ukraine and Russia was a land war. That's not happening here. And so does Hezbollah have the ability to execute for Iran in the north, for example? Does Hamas in the south? Do the Houthis in Yemen? All these Iranian proxies around the region have been decimated, Mark. They have been absolutely decimated in the last couple of years. They don't have the military capability that they once did. They're not the threat to Israel from that traditional military perspective that they were over the last year or 2 years. Iran, I thought we saw a pretty aggressive strike last year with Iran. They didn't really get past that Iron Dome very well. And so I do have some open questions whether or not Iran has the ability to sustain anything moving forward. It's obviously going to be an open question. I do believe that Iran has to strike and has to strike hard. There was like I said, you don't get more escalatory than hitting the nuclear strikes out of Iran. That's as aggressive. I think the only other maybe on top of that level of aggression would be trying to take out the Ayatollah themselves and going for regime change. But I'm not sure they're not going for regime change here. They're going big on this one. What does Iran have to do to impact outside of that? I'm not sure. I'm really not sure. It's an ongoing conversation. In my estimation, I think there is some commonality against the 24 case study. We're certainly going to be seeing performance capped out until we see Iran's response, and then most likely the response coming back out of Israel. I think it's an open question though.
Yeah, I know, and I think that's in analyzing that this conversation with you today in the podcast and the ones I've had with you this morning and last night, that's the takeaway I've had. It's like, all right, as long as there's an issue, performance is probably capped. Right. As
long as we're debating it, it's going to be hard to embrace a momentum narrative. That's going to be hard to embrace.
And as soon as the market feels like there can't be additional escalation, whether through Iran's inability or whether a peace deal is brokered or whatever it may be.
If this just stays Israel and Iran, does it become a lasting market story?
I do not believe.
I don't believe so either.
Supply is impacting. And give me that crude oil chart as we transition, talk about inflation and the Fed, right? So unless the crude oil chart gets out of hand, right, and you have a big up day, but it's giving a lot of that back, And whether it becomes something or just a short-term surge, right? We'll see how that plays out through the ability to disrupt oil. If it doesn't, this chart is not going, likely to trend strongly to 120 JP Morgan. But and oftentimes
kind of got to navigate 78 before you get to 120, JP. It's so stupid. It's so stupid. I'm sorry. It's like I am so sick of the banks, and I don't know why anybody listens to those banks anymore. I don't know why you read them. I really don't. I don't understand it. I don't understand it.
I read
how everything. In the world does JP Morgan coming out and talking about 120 oil prices help anybody today? Like anybody. Or are they just fear mongering?
I don't know. I don't.
If you're talking about oil at 120, you're fear mongering. There's no analysis that leads to that right now.
All right. So now, what oil does, and this is interesting as we transition into inflation in the Fed briefly, just want to spend a few minutes on it. We have a Fed meeting this coming week, right? Mm-hmm. The Fed has kind of been in the background, really haven't been a market story in the Fed. I mean, they're out there saying the same stuff they always do. You got a Fed speaker like a Waller who was out there saying, yeah, maybe we can cut this year. But most of the Fed speakers and Jay Powell's messaging has been very steady. We have time. We have concerns, dual mandate. We have concerns on both sides of the dual mandate. We have time to be patient. That's been a very consistent message for months and months and months now. I don't anticipate Jay Powell changes that. Now, the interesting thing, and we were talking this morning about oil and how it might impact the language, right? Reinforce maybe an already pretty steady message. Right, that if oil does start trending, that's a big if, right? We've seen a spike, we haven't seen a trend, right? And fantastic call out, man, over the last few weeks. You have sniffed out oil, sniffing out what it's been sniffing out. You've been on this for 3 weeks now, and you've been like, no, there's something here. Just from a pure technical, you didn't break down any macro. You're just like, I'm reading the chart. The chart's telling me
increase in support against the backdrop of a good reversal breakout of 64. It was an easy call.
Yeah, shut up. Oh my God, you so infuriate me when you do this. Oh, it's just easy. Yes, to a master technician who's as bright as you are, it's an easy call. But this was a fantastic call, right? This is a fantastic call. You saw the technicals, sniffed it out, right? Now, if oil trends, so there's a couple things here. If oil stays elevated trend, now, we've had some fantastic inflationary reports, not just this month, but last month as well. Mm-hmm. Back-to-back CPI and PPI. Trump's out there, rightly, talking and being like, hey, these inflationary numbers are, really good. And then, Powell cut now. I think he called him a numbskull this week. I never heard him use that word. I found that interesting.
That's old school. That's
yeah, I was like, a numbskull.
That's old school right there.
I haven't heard numbskull in a long time.
Calling back the old school name calling. that's OG. That is OG trolling. Bunch of numbskulls out there. I love it. That's funny.
Call it Powell a numbskull because so it wouldn't cut. But so you've had some really good inflationary numbers. And we've seen those rates and the cuts hold steady, right? So there's two questions I have. One, I have a pretty good handle on what will Powell's message be. I believe the message will be the exact same message because Jay Powell is very reticent to change anything until he is forced or has to, right? I would like to see if you agree with that. And two, how do you see these inflationary numbers moving forward, assuming that oil is or isn't an issue?
Well, the one thing that, we talked about with the Iranian-Israeli situation and crude oil and that whole escalation, let me put it like this. The last couple months of inflationary data has been pretty decent, quite frankly. When you're looking at the trends of the CPI report, for example, and let's just kind of take a look at the bar chart here on the core CPI. When you look at the trends this year so far, Mark, they're not bad trends on CPI. When you look at this from just a inflationary perspective, coming down to 0.2, coming in at 0.1, 0.2, 0.1. And so the forecast has been 0.3, 0.3, 0.3. Look at that forecast, never changes. 0.3, 0.3,
4 months 0.3. In a row.
That's just lazy forecasting, by the way. That's people who don't want to have an opinion, but the numbers are coming in outside of that February bump up where we all got really concerned. It's been 3-4 straight months of pretty decent data. Point two is right at the Fed's projection mark. Point two is right where the Fed kind of wants it to be. Point 2.1 is the path to that 2% inflationary target. You look at the CPI report where you just take into account everything, and you're looking at point two, negative, point two, point one, nothing really to be too concerned about right there. When you look at pipeline inflation, core pipeline inflation, which is the PPI report, pipeline inflation's downright, underneath and not a concern. And so when you look at the pure inflationary data, just the inflationary data, you got to say that the path that they're on the path to 2%, right? Now, when you take outside that and you look at the context of everything else that's happening right now. All right. My argument is really, really simple here. I have criticized Jay Powell many times in the last few months for not having an opinion. With the data and where the data is going, not having an opinion. And it's easy to criticize Powell. That's easy. It's easy to criticize anybody. That's
would you go so far to say he's a numbskull?
No, I would not call Jay Powell a numbskull. No, I wouldn't, but I do think it's funny. But what I will say is, if you're looking at the historical data, the data does suggest that the Fed can start embracing a cutting cycle. And when I look at it like this. All right, why is the Fed not already embracing a cutting cycle? Because they have the argument. I've been making fun of them and criticizing them about not forming an opinion. They should be able to form an opinion based on the data here. My argument's really simple. The reason the Fed has not embraced a cutting cycle so far is the anticipation of tariffs and whether or not tariffs is going to have a sizable impact on the inflationary side of the equation. We're going to have to wait and see on that, but I've been hearing that for about a month, about 6 weeks, that tariffs, and I do believe tariffs are a tax. I do believe tariffs are inflationary based. Absolutely, I believe that. But what we're not seeing is it show up in the data as of yet, and people, are rightly so, are saying, okay, it's coming. I do believe tariffs, at least where we're at right now in this saga, you can't tell me there's a 55% tariff on China and not tell me there's not going to be a cost increase on businesses and profit margins or consumers and just pure cost. But that tariff increase certainly can be offset if we start to see negative economic data and slowing economic data, which I do anticipate on the back half of this year to see a little bit of slowing economic data. And so the slowing economic data can certainly offset, which slowing economic data is deflationary, okay? Slowing economic growth is deflationary, and tariffs are inflationary. Those two can offset one another. The next point that I would say on the path of policy, and what I would, if Jay Powell calls me up and say, hey, Coach Matt, can you give me some advice? What should I do with policy? I would say, Jay Powell, I would recommend that you start a cutting cycle where you're going to basically eliminate the restrictive territory of the interest rate. What a lot of people don't understand when we have this conversation is the Fed is either going to be restrictive on monetary policy, they're going to be accommodative on monetary policy, or they're going to be neutral. And that's all against what they see in the economy, right? So right now, and they have been for years, restrictive on policy. Where policy is normal is right around 3 to 3.5%. Right now we're at 4.25 to 4.5%. And so we got about 75 to 100 basis points of restrictive territory right now. And so if there's a debate whether or not tariffs are going to be inflationary, what we have seen in the last 4 months is I don't want to say deflationary, but certainly on the path to that 2%. Tariffs, inflationary, Economic contraction. I'm not calling for a recession, but I do see some slowing growth coming into the numbers coming into the back half of the year. You're going to see a slowdown there, offset that with a little bit of tariff bump up. They kind of offset one another from an inflationary perspective, which means I do believe that the Fed can embrace a cutting cycle with only removing the restrictive territory. I do not believe that the Fed in this condition can embrace any degree of accommodation right now, but I do believe it is time to reduce the restrictive territory. And it's not just this data we're seeing here, Mark. It's also with an assumption that we are going, kind of what Jensen Huang said the other day. We're going through he said decade of automation and AB. I'm going to say we're going, and I certainly agree with that, but I'll just kind of one up him a little bit. We're going through the age of automation. This technological build out is happening faster than we've ever seen in human history. And at no point has a technological build out. And Mark,
question for you, is it going faster than you thought maybe even 2 years ago?
Absolutely. And I thought I was aggressive.
Yeah, and I thought you were aggressive 2 years. That's what I thought. Like, because Matt's been all over this AI thing for the last couple of years, and he's been no, this is it, this is real, this is it. And that's why I was curious. Like,
Mark, they're going to get AGI in the next year to 12 to 18 months. Quantum's not 25 years from now; it's 5 years from now. The technological
Jensen backed off those statements.
Oh, of course, yeah, I did. Yeah,
like everything's so fast.
It's so fast. And once they achieve AGI, it's even faster. But my point is this. Would you agree that technology outside of every industry and sector that impacts the world, our financial world, would you agree technology is the number one deflationary area of the market?
Yes, of course. One, there's a lot of historical evidence that shows that just normal, good old-fashioned technology just does that, right? Like we know that. That's fact. That's not debated. And so if you accept that as a fact, that technology by its nature is deflationary, if you accept that we are going through a speed and process of the evolution of technology that is a once in multiple generations event, then you combine those two, that's obviously going to be really.
Would you agree that automation is coming from an economic perspective?
Yes, of course.
And it's going to impact not just certain areas of the market, but it's going to impact every area of our economy.
Life's changing before our eyes.
Would you also agree that the number one cost to produce a service or good is the labor input?
Listen, you've convinced me, James. Powell's
I'm not asking rhetorical questions for you.
He's a numbskull.
My point is this. And again, my argument is for the Fed to start embracing a cutting cycle and start to reduce the restrictive territory because economic contraction expected to offset tariff impact. But hold on, let me finish my point. In the age of automation, that the technological build out towards automation is happening faster and impacting every area of the market simultaneously, I do believe that is going to present a fairly large deflationary environment coming up in the future, where wage growth, not wage growth, but cost to produce a good or a service is going to come down, which allows that to come down as well. Listen, and so that's
Trump needs to hire you to get out there and make the argument. That's the best argument for a rate cut I've heard. Period.
Listen, we have to start having conversations as a society that don't start with finger pointing at each other. That stuff's driving me crazy, and it's getting worse and worse and worse. Democrats and Republicans just finger pointing, blah, 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 blah. We're going into some very important moments in time. And if we do this right, we can substantially change everybody's life for the positive, and not just here in America, but everywhere. And so I do think the age of automation is a very important thing. And I do believe that that is the number one deflationary argument that you can make, is that you are going into the automation environment and you need to get in front of things. And that's the thing about the Fed. That's the thing about the government right now, is they're not getting in front of things because we're too busy yelling at each other over the current things, that we're not working together to get in front of certain things. And so a little political there. I apologize for that. But at the end of the day, I do believe that the Fed can start embracing a cutting cycle, reducing the restrictive territory, because tariffs are going to be offset through a slight reduction in economic activity. And as such, we need to start embracing these conversations, because if not, I do start fearing a little bit of deflationary situation due to the age of automation.
That is not the argument Powell will make on Wednesday.
No, it is not.
Powell is going to go out there almost certainly and give some version of the same speech he's given 12 times in the last 3 months. Let's say we do not have resolution. Okay, let me give you 2 scenarios, and then we got to get to stock and drop it. There's no resolution with Israel, and Powell goes out there and delivers that speech. Is the market going to not like that?
Is the market not going to like Powell sitting on the fence again?
We don't have resolution with Israel and Iran, and Powell delivers his boilerplate speech on Wednesday. Market get crabby on that one?
I'm already crabby with the question. So yeah.
So does that, I mean, basically, do you break support, head, lower 20-day moving average, give out type of price action?
Well, I don't know about that. That's next Wednesday stuff. I don't know. Like, what are you talking about?
Now, if there is resolution between,
I will just say, if that is the case, I don't know how the market buys that up. Like,
yeah,
if we're still debating Israel and Iran next Wednesday, and Powell's like, we're sitting on the fence, guys. We're not doing anything. I haven't formed an opinion yet. It's like, okay, what are we doing? Like,
listen, let me be very, very blunt. If there is not resolution and Powell delivers that speech, I think you could have some downward pressure where you test, some recent lows, right? Not April lows. I'm not being dramatic. Just, come back into the range. Come back into the range. See what that 200-day moving average tests like, right? Now, if you have resolution,
the last thing I'll say is, until all of that, a lot of hypotheticals, if A, then B scenarios. Mm-hmm. Well, I'm teaching a webinar on Monday called the Tackle 25 Covered Call, and you could write covered calls to bring in cash flow to offset that. That's all I'm going to say.
Well, and you think about it, if you think, market might be capped, not bad time for covered calls. Well, Matt, if there's resolution between Israel and say, something happens where that market's not going to care what Powell says, this time. They'll worry about what Powell says later on. So, a lot of moving parts.
Do you remember anything Powell said of any significance last time?
It's the same speech. I remember it all because it's the same speech every time, right?
Mm-hmm.
It's the same thing. Is like patience will be used. Like if you're playing a shot game and he uses patience or time's on our side, right? You're gonna get drunk on Wednesday. You're gonna get drunk.
You can't pause for years and keep saying time's on my side.
So
oh, pal, that's hilarious.
All right, let's power through some stock it or drop it. Stock it or drop it is a quick game I play with Matt, where I give him a ticker symbol and he simply says stock it, basically interested on some time frame. It can be whatever time frame that Matt decides, looking at the chart or looking at the company, or drop it, no interest at all. I am going to start with Marathon Petroleum. One of the things long before the headlines on that have occurred today, right, with Israel, we have been talking energy. And when I say we, you and Frank have been really just as technicians looking at charts, sniffing out a lot of different things.
Yeah, we had a great Traders Lounge earlier this week where we did a deep dive on all things energy.
On all things energy, right? Because this
fantastic.
was, where technical analysis trumps macro, case example number 4,000, of that. But Marathon Petroleum, stock it or drop it.
Oh, stock it, baby. Are we talking about time frame though, or
the time frame's up to you, bro. I don't try to hamstring you on this one.
You should, you should, because if you don't try to hamstring time frame, you can paint anything you want. We got this on the radar for a potential short-term trade. It's going to be stocked, but I don't know a time frame, so you better dial that one in.
Yeah, I like it from a position trade perspective. Marathon Petroleum, refiners, I think there's really great long-term arguments. But, let's go to Taiwan Semiconductors. Taiwan Semiconductors keeps dropping news that gets dwarfed by everything else going on. This happened with their earnings season. when they had a fantastic earnings report, but people were talking tariffs and everything, and so nobody cared. We did. We pointed out about 1,000,000 times. Once again, they, this week, saw its revenue up through January through May. They reported 42.6% higher and than the year before. 42.6 revenue on a company this size? That's insane. That's insane.
We're all spoiled. We're all spoiled based on that. Stock it. Taiwan's an amazing company. Obviously, they're a revenue machine right now. Their hat trick they pulled in the earnings season set the stage for a beautiful uptrend. I remember talking about how, just that day, you asking me a question and me saying, if we were not having other conversations right now, tariffs, this would start an entire AI move. I remember saying that. And eventually, that's exactly how it played out. Taiwan Semiconductor.
On this podcast, you said it not just once, but twice within a 2-week period.
And I'm not seeing any changes in the current trend. I mean, it's a fantastic trend. It's been a good producer. I think you got it on the radar for a secondary pattern right now.
All right. Next one, Oracle. Right, Oracle's a sneaky, sentiment name. They oftentimes report earnings like they did this week, where they report it. It's not when a lot of other companies are reporting, right? Amazing price action. I'm gonna, obviously you've just talk about the earnings. I know what you're gonna say. It's too extended to do anything, but stock it or drop it. How are the earnings on Oracle?
Get it on the radar. I don't know if that means stock it, but yeah. I definitely want to drop it. Secondary pattern, it's obviously left the station. You got to be patient here, wait on a pullback, profit-taking environment, consolidation, whatever it is. Oracle had a great report, though, this week. They came out with beats on EPS revenue, $2 billion increase in forward-looking guidance on the revenue side of the equation. We call that a tackle trading a hat trick. And so it's rewarded. It's justly rewarded. Oracle had a great report. They had a great quarter, and now you're completely left the station. You're going to the moon. So definitely don't chase candles. Put it on the radar for secondary pattern.
2 more for you. You've been way too positive. Let me give you
you're the one who picks the stocks.
I know. Let me give me a name. GameStop. They reported earnings. They also announced that they're going to sell a bunch of convertible senior notes. Right. Basically, we're going to raise money to raise monies. Revenue down from the same period of last year. Stock going to drop at the infamous meme stock.
I didn't like much about their earnings report, honestly. They came out with good. Well, yeah, I did. They came out with 17-cent EPS handle against an 8-cent expectation. That's a decent funny. That's a decent beat. But they also are issuing notes to buy crypto, trying to become that crypto exchange the same way MicroStrategy is. I just don't understand why you would need to get GameStop to go out there and buy some Bitcoin for yourself. So I'm gonna have to say drop it. I think you play Bitcoin at the extended ranges, not Bitcoin, but GameStop at the extended ranges. And this is one of them. $20, $21 is one of them. But to me, it's got to be a lot more radical than this. I think if GameStop ever approaches $45 to $50, you start approaching a short conversation. If GameStop ever gets into the $15 range, I think you start entertaining a little bit of a buy on reversal. But I don't have a lot of opinion in this range after earnings, so I'm going to say drop it.
Last one is Silver Wheaton, and their name isn't Silver Wheaton anymore, but that shows you how long I've been trading. Wheaton Precious Metals. Silver Wheaton, I thought was just a cool name. Silver's obviously made a great move. Another one that you've sniffed out. Gold. This is a miner that does a lot of silver, a lot of gold as well. But Wheaton Precious Metals, stock it or drop it.
Stock at this beautiful trend, beautiful pattern with an upward movement in price yesterday. Secondary confirmation here today. Like it for a swing trade, like it for a position trade. And gold and silver stocks obviously have some degree of competition right now, but pretty good little situation on Wheaton Precious. So I'm going to say stock it.
All right, get to Coach's Corner. I went, Matt, and I had some questions to choose from, but with the news, I went and pulled a couple traders, and I asked questions that were on their mind. Members of our tackle trading community got them from them over the last 14 hours or so, just like, all right, what questions do you have within this environment after the big news flow? First question, what is the role of covered calls in this environment? I haven't been selling them. I have not been a
Good,
big
neither have
covered,
I recently.
I have not been selling them. And the person goes on to say, I haven't been a big covered call seller, but is it something that I should open my mind to in this environment? That's a question from a student.
Um, I during the recovery phase after the market correction, the hedging conversation really hasn't been a big part of the conversation. But as we're approaching kind of the all-time high, and you're starting to see that on the Nasdaq, for example, Nasdaq got within one candle of the all-time high this week before a little bit of a pullback. S&P 500 kind of sniffing that, got around 605. Obviously, 610 to 613 is kind of that all-time high resistance level. IWM hit the 200-day moving average, a little bit of a pullback, but obviously a massively important overhead point on IWM. When you're looking at the diamonds, DIA, and you're talking about those cyclical components, a little bit of consolidation here, kind of fighting that 200-day moving average. It does open up a little bit of above 430. My general point is, as the market is kind of, I've always felt during this recovery phase that we were going to ultimately end this conversation at the all-time highs, that we were going to see some movement to the all-time highs, and then secondary patterns are going to develop, maybe a little bit of consolidation waiting on a catalyst break. We're kind of getting into that conversation, quite frankly. And so with the Israeli situation kind of coming to a head yesterday, and that being a little bit of an ongoing conversation in the Ukrainian Russian situation, it took well over a month for that volatility to kind of settle out of that market. It took a few weeks on the first Israeli-Iranian situation from April of last year. And like I said, when you asked me the question regarding how does this impact price, I do think it caps out price's ability to find momentum. And we're starting to see a little bit of that rollover here. So I do think you should start entertaining a little bit more on the cash flow side of the equation. And if you're looking at the covered call, these are good times for covered calls. A little bit of an increase in volatility, and when I mean a little bit, I mean like the VIX barely popped, came right back down, and so it's not a massive volatility shift here. But I would say as you're approaching these overheads of resistance, and you anticipate a little bit of capped out performance, you would probably start entertaining the cash flow side of the equation a little bit more at this point. You take a look at Bank of America, for example. Bank of America, Tackle 25 stock, one of those old OG Tackle 25 stocks, been on there forever. Well, Mark, even if it breaks out of 45, there's a lot of overhead between 46 and really kind of that 48. You can come into Bank of America, go out 35 days from now, go out to a 20 Delta contract, for example, sell that 47 call option. You got a lot of range up there for that call option to work out. And so you can do that on a lot of things right now, being able to, if you can sell a covered call at that all-time high resistance or above it, yeah, I find it to be very difficult for the market to be breaking out and running in this environment. So I would say yes. Obviously, it's going to be sector and stock dependent, but I do think based on kind of the defensive nature of the market this week, a little bit of slight increase in volatility on the back half of this week with some geopolitical concern going into the weekend. Yeah, I do think covered calls play more here moving into the future than they have during the initial recovery phase. There were two things that we focused on kind of in this initial downward movement in price, not in Bank of America, but the ES and the market itself during the correction phase, is to write covered calls as fast as you can to offset loss on those longer term investments, and two, kind of learning how to bring it down from a time frame perspective and find those short-term trends on that 1 hour chart. I'm not saying we're kind of go through that same saga. I'm just saying now it's probably the time to entertain the covered call side of the equation a little bit more. Yes.
Okay. Next question, final question. And they say, I'm a swing trader, because I asked them to clarify after they asked me the question. They're like, I'm a swing trader exclusively, do short-term trades. And they said, my volatility playbook is a little rusty. What are some, core rules Matt would suggest as that? And they originally asked the question, I was like, well, what type of trader are you? And they're like, oh, swing trader exclusively. So swing trader, volatility playbook, a phrase that we use in at tackle trading. What are some core rules that a swing trader, someone with short-term trades, should have around their volatility playbook if we were to get
Volatility playbook can include a lot of different things, right? Strategy selection and so on and so forth. But from a swing trade perspective specifically, I think there's two things that you got to think about from a swing trader in volatile times. And again, I'd like to see how the next couple of days plays out. But if we're going to start to see increasing volatility, and Mark, increasing volatility is not the VIX at 19. Can we both agree with that?
Yeah, this is not volatility today.
Okay. So the VIX at 19 is not that. But when the VIX gets above 25 and the VIX ultimately gets above 30, that's where you start to see the true nature of volatility. And so if we start going through volatility moments where we deal with a lot of uncertainty, there's two things that you have to do as a swing trader. Number one, you got to be a little bit of a day trader there too, because number one, you got to shorten time frame down. Okay. You don't, as a swing trader, you want to be able to project clean technical environments for the next 3, 4, 5, 6 days. Right. That's why you're making the trade. You think you can get a clean technical environment off a bounce on support or a breakout of resistance to capture 3, 4, 5 days of price movement. Right. Mark, can you project out 5 days from now?
No, in this environment, no, very, very difficult.
Okay, that changed. And I'm not talking about the Fed next week. Like, that's not part of that equation. Like, I kind of think Powell's going to punt. I kind of think Powell's going to do nothing. And I kind of think Powell's going to sit on the fence. I'm talking about the Israeli-Iranian situation that we just talked about for 30 minutes earlier in the podcast. If that starts to expand, we're going to see more volatility. And so, number one, I would say tighten up those timeframes. If your standardized time frame that you look as a swing trader is a daily chart, for example, and you do a lot of your analysis on a daily chart, I'd probably go down a little bit, probably start looking at a 4-hour chart, probably start paying more attention to the 1-hour chart. Tighten those time frames down a little bit. If your time frame is, you know what, I do all of my prep work on the daily chart and I break down the execution on a 1-hour time frame. Yeah, I'm good with that. I'm good with that. As long as you do it something on the intraday side of the equation. You cannot just live on the daily chart. You cannot just make decisions on the daily chart in times of uncertainty and volatility. You got to bring that down to an intraday read. So again, that 1-hour time frame, 30-minute time frame will become a little bit more important. And then secondarily, Mark, you got to cut position size down. Risk of ruin is a very important principle to traders. You should never be putting XYZ more capital into a trade than over 4% against portfolio risk. And so in times of uncertainty, in times of volatility, and I don't think we're there yet, but again, we want to have this conversation in front.
You want to have it ahead of time.
Community can, start to understand it a little bit, but short time frame, and then you cut position size down. If you are a futures trader and your standardized trade is a mini contract on the ES, right? Well, you don't do mini contracts on the ES. You do micro contracts on the ES. If your standardized rule is I put $2,000 into a swing trade because that's 2% of my $100,000 portfolio, you cut that down to $1,000 of risk in a trade. So you just get more conservative in general. You make sure that the environments are cleaner. You trade less in times of uncertainty unless you're day trading, and then you trade a little bit more. But the two things I would say to all traders in times of uncertainty, of which we call volatility playbook, cut position size down, cut time frame down.
Fantastic, Matt. Talk about this amazing webinar coming up where you are going to talk about covered calls. Feels like a covered call environment. Tell us it. Send us out.
I love swing trading. I love day trading, and I love writing covered calls. That's basically me. And we're going to be talking a lot about that the next 3 weeks, guys. That's a lot of me. A little bit of day trading, a lot of swing trading, and a heck of a lot of covered call analysis. And in the next 3 weeks, you're basically going to get a snapshot of how I navigate the market. Covered calls on Monday, day trading in a week from there, and then precision trading as we end our virtual conference season at Tackle Trading. And so we're going to do a lot of covered calls next week on Monday. And covered calls are absolutely amazing. Don't sleep on cash flow. Don't sleep on covered calls. Don't sleep on compounding. I'm going to teach you all about it on Monday. And so come join me Monday, 7 p.m. Eastern Standard Time. We're going to be talking about the Tackle 25. We're going to be talking about covered calls, and we're going to be getting into, and we're going to be picking multiple stocks off the Tackle 25 and start doing covered calls as well. So want to invite everybody to the covered call webinar called the Tackle 25 on Monday, 7 p.m. Eastern Standard Time. Going to have a heck of a lot of fun, as we always do in our front end webinars.
Fantastic. Have a great week, everyone.
Later, Tim.